Good morning, friends. Today we will discuss the topic of investment accounting. Investment. An individual or an organization does investment out of saving or out of the surplus finance available and not required for a specific period. If extra money is with us and it is kept idle, it will not increase or appreciate. On the other hand, if that money is used to keep it in fixed deposit or to acquire securities, it will increase on the maturity date due to the income earned. It may also appreciate due to the increase in the prices of securities. Investment is parsing money today in anticipation of the getting more money in future. According to accounting standard number 13, investment are assets held for the earning income by way of the dividends, interest, and rentals for capital appreciation or for other benefits to the investing enterprises. Here are the types of investment. Basically, investments are divided into two parts. First is on the basis of the period of holding, and secondly, on the basis of nature of investment. On the basis of period holding, investments are divided into two parts. Firstly, long term investment, and secondly, short term investments. Then, investments are divided on the nature of investment. Firstly, variable earning securities, and secondly, fixed earning securities. Here are some the examples of the investment as per accounting standard number 3rd. First, government and trust securities issued by the companies, government and local authorities. Second, bonds and debentures issued by the companies. Third, deposits with the companies and banks, immovable properties, and some other examples partnership firms or jewelry, insurance, politics, etc. Policies, etc. Here we discuss the formula of cost of investment. Firstly, take the purchase price of the investment, then add brokerage of the purchase of investment, then add fees or commission of the investment, then add stamp duty, and this total amount is called as cost of investment. Friends, we will discuss here the disposal of investment. Firstly, we take the gross profit minus the expenses related to sales from the gross profit, then amount remaining, which is called as net sales, then amount less from the net sales for the carrying amounts of the investment sold, and remaining amounts is profit or loss. This is the very good formula of the disposal of the investment. Here we will discuss the cum interest and ex interest. Firstly, cum interest and ex interest quotations are the very important part of the transactions of the investment. When An investment is purchased or sold before the date of payment. Acquisition may be arises whether the quotation's price includes interest or not. In such a case, the quotation price may be X interest or cum interest. Cum means with and X means without. The term cum interest and X interest are relating to the fixed interest bearing securities. Cum interest means cumulative interest or inclusive of interest, and X interest means the exclusive of interest. Interest on fixed asset bearing securities accrues on the specific due date. The important point to be noted is that the holder of the securities is entitled to the whole amount of interest that accrues on the due date, irrespective of the period of holdings, because a company pays interest only to the persons whose name appears in the books of accounts of the company as a holder on the date of payment of interest. Cum interest price cover the cost of investment and interest accrued up to the date of purchase. When interest becomes due, it would be the right of the buyer to claim it. X interest price cover only the cost of investment, and the buyer is liable to pay additional amount of interest accrued up to the date of purchase of investment. Here we will discuss the formula of investment account, which is used for the fixed interest bearing securities. There are the two sides. First is debit and second is credit. First side is uh, record the nominal value, income, and capitals, which is purchased by the individuals. And another side, second side, is a credit side. There are record the transaction of the entries, profit and losses, and lastly, calculated the balance of profit and loss on the investment. Here we will the discuss of the journal entries in the books of buyer for the fixed income securities. When investment are purchased as a X interest, then firstly we record the nominal value in the nominal value column on the debit side. Then we enter the cost of purchase in the capital column and enter accrued interest in the income column. Secondly, when the investments are purchased at the cum interest, then we enter the nominal value in nominal value column. Then we enter the accrued interest in income column and enter priceless accrued interest in the capital column. Then we discuss the third transaction, sale of the investment by X interest. Then we enter the nominal value in nominal value column and also enter the accrued interest in the income column. And lastly, we enter the price received in capital column. Then next transaction, when sales investment of sales by the cum interest, and then we enter the nominal value in nominal value column and enter accrued interest in the income column. Lastly, in this transaction, we enter the price less accrued interest in capital column. Next transaction of the profit of investment. When profit are earned on the investment, then we enter the profit on sale of security in capital column. By the formula profit, this formula is the very important for the calculation of profit. Here we see the formula profit is equal to sales price minus weighted average cost. Then we enter the loss of investment. When we get the loss in investment, we enter the loss on sale in capital column with the formula of loss. Here we will see the formula of loss. Loss is equal to weighted average cost minus sales price. Then we record the next transaction of the interest received on investment. Firstly, we calculated the interest received on the due date and enter in the income column. Next transaction of the interest accrued. In this transaction, we calculate accrued interest and enter it in income column. Then we enter the transfer of the interest at the profit and loss account. Balance of interest column and transfer to the balance to profit and loss account. Then we calculate the cost or market value whichever is less and it enter in the capital column. Lastly, we record the transaction when loss on valuation. Any loss on valuation, that's called costless market value at the year end and enter in it capital column with the formula of loss of valuation. Here we will see the formula of loss of valuation. Loss is equal to cost minus market value of the investment at the end of the year. Here we see the second formula of the investment account for the investment in the shares. This formula is the so different among the formula of the investment which is the fixed bearing securities. Here we record the transactions in the two sides. First is debit and second is credit. First side we record the transaction of purchase of shares, bonus shares which is allotted by the company, right shares and subscribed shares. Then we also record the profit on the sale of shares and transfer of the dividend. Then we record the some transactions at the second side, means credit side, dividend of the shares, sale of the shares, loss on the sale of shares, and balance which is remaining in this account. Here, journal entries are transactions which is recorded by the investment account or in the investment account. Here we discuss the journal entry or the procedure for the recording of shares. Firstly, we record the opening balance in nominal value with the face value, nominal value column with face value. Secondly, we record the transaction of the recording of the balance in the capital column by cost. Secondly, we record the transaction of purchase of shares in nominal value column at nominal value, and secondly we record capital column in the cost value. Then we record the bonus shares in nominal value column at the nominal value amount. This amount is record only in the nominal value column. This is not entered in the cost column. Then here we record the transaction of the right shares in the nominal value column at nominal value, and secondly we record the amount of the cost in the capital column. Then next we record the dividend received from the companies in the capital column for the pre-acquisition dividend, and secondly we record this amount in dividend column for the post-acquisition dividend. Next, transaction of the sale of shares. Amount recorded in the nominal value which is earned from the sale of shares, and then secondly this amount is recorded in the capital column by the amount received from the sale of shares. Then next we calculate the profit or loss on sale of the shares and record these transactions. When loss is born in this transaction, we record in the capital column of the credit side, and when profit is born in these transactions or in these situations, we record the profit in the capital column on the debit side. Lastly, balances of the nominal value in nominal value column and cost in capital column are calculated and recorded. Lastly, we record the loss on valuation. We record the loss on valuation of the shares in hand in the capital column on the credit side. And lastly, balance on dividend account is transferred to the profit and loss account on the debit side of investment account. These are the procedures of the recording transactions or journal entries. Thank you.